Something historic is happening in gold right now. Prices are surging, headlines are buzzing, and many are left asking the question, is it too late to buy? And is now the time to sell? But the truth is, what's really driving gold's all-time highs is far bigger than just a simple price rally. In fact, gold's recent price surge, contrary to popular belief, is not brought on by everyday investors piling into gold. No, it is the clearest warning signal we have that the global monetary reset is accelerating, driven by massive central bank purchases as foreign nations ditch their dollars and position into gold. Not only is gold a true store of value, but resets throughout history have shown us time and time again how gold performs compared to a failing fiat currency. And the 4-digit numbers that we're seeing today, well, that's the low end. That's just getting started, which is why many experts now are coming out saying that they could expect to see $20,000, $50,000, $100,000 an ounce, which still would be on the low end of historical resets that we've studied. But I'm not here to speculate. Today, we can look at those patterns, what is causing gold surge today, and more importantly, what we can expect to happen next, how it will impact not only your gold, but the value of every dollar in your wallet, your checking, your savings, and your financial future. Let's get into it. I am not going to lie to you. Gold has hit the mainstream. I see it on my TV, on the news, online, everywhere I turn, which is why many people now speculate that it is a rush of everyday investors who are driving gold's recent surge, which is also why many now think, okay, we've hit the top. It is too late to buy or time to sell. But despite gold's recent shift to the mainstream, most of the public has not even begun to get into position. In fact, a recent study from Bank of America showed that over 75% of advisors had little to no exposure to gold, less than 1% of their portfolios. This tells us two things. First, gold's rise so far has been driven almost entirely by central banks and large institutional investors, which we're going to break down more together in a minute. But second, this widespread mass gold rush that people assume are happening hasn't even begun. It is clear that everyday investors, most people in the United States, are just beginning to wake up to the idea of gold. Of course, as the dollar continues to decline in value and inflation eats away at savings and retirement accounts, there will be more people waking up, and we can expect to see more people rushing into gold. In fact, just last week, Morgan Stanley announced a new strategy for portfolios going from 60-40, 60% equities and 40% fixed income, to 60-20-20, with 20 being gold, calling it the new anti-fragile asset. Not only is this going to prompt more to move into gold, but it shows us that even Wall Street can't hide what's coming next. See, since 2022, when the Fed hiked rates, you would have assumed that gold would have plummeted, but instead it's done the opposite, which has shown us that the Federal Reserve is losing control. It's in their interest to keep gold prices low against the dollar because the dollar is the global reserve currency. If gold were to rise the way it has been, it puts the dollar's position in jeopardy. But central banks have been ditching their dollars and moving into gold at the fastest rate in modern history. Massive overspending and a skyrocketing debt burden has many nations questioning the credibility of the United States. But not only that, ever since the United States enacted sanctions on Russia, the dollar has been a tool, a weapon against foreign nations who disagree with Washington, leading many nations to realize that what they thought was a neutral reserve currency or something that would protect their wealth now not only is being devalued and inflated away, but also can be used against them should they speak up or disagree. But gold is the opposite. Gold cannot be devalued or inflated away, printed more of. You can't turn gold on and off with a button, and you sure can't weaponize it against another nation. So the choice becomes clear. Do you risk adding more U.S. debt, or do you instead position for gold, especially as nations are banding together, whether it's the BRICS alliance or China with their gold moves, to use gold as the new anchor of the monetary system, a way to build trust? Instead of it being a new fiat currency replacing the dollar, settlement will be done with gold as the underlying foundation. But as demand for our debt continues to decline, it will force our government to continue to print more. And as this debt cycle accelerates, where the interest grows, meaning we have to issue more debt, meaning that our debt burden grows even bigger and the interest grows bigger, and so on and so forth and so on and so forth, well, we can expect to see each existing dollar worth less and less, right? And that's where inflation turns to hyperinflation. And if you think it's bad today, just wait until you see what's coming next. We have seen it play out throughout history, whether it's Venezuela, Weimar, Argentina, Lebanon, Cyprus, the list goes on. And they all end the same way. In each instance, gold thrived while the fiat currency failed. If we take Venezuela as an example, they have had multiple official currency resets where they revalued the currency, right? Lopping off zeros. In 2021, they lopped off 6 zeros, right? They did 1,000,000 to 1 revaluation of their currency. Well, what happened to gold? You can see that it absolutely skyrocketed. Same here. If you look at this chart of Weimar Germany, how many German marks did it take to buy an ounce of silver and gold? And how many German marks did it take to buy an ounce of silver and gold as this hyperinflation took hold, right? Well, you can see that both silver and gold went up exponentially compared to the failing fiat currency. Silver is what you would use for your grocery or bills, right? Your daily driver, essentially. Whereas gold would set you up for opportunity on the other side. To jump up to 87 trillion German marks, well, that provides real crisis opportunity because you would be able to convert your gold back into the fiat currency on the other end of the reset and purchase whatever you wanted, whether that was real estate, freedom, safety, assets, you name it, or you could hold on to your gold. But the choice is yours. Whereas if you stayed in the fiat currency, well, good luck. You're going to have all of your wealth wiped out right underneath you. These are the prices we could expect to see if there was a currency devaluation or as this reset continues to accelerate. And I use the word price very intentionally because price and value mean two very different things, right? There's a famous saying, the best time to buy gold was yesterday. The second best time is today. The truth is you could be sitting there thinking I should have bought back in 2008 for $700 an ounce. Or in 2015 for $1,000, or even a year and a half ago for $2,000 an ounce, right? And the answer is yes, you should have, but that doesn't mean that you shouldn't also be buying today. As far as gold's value goes, it always has value. It has intrinsic value. As far as gold's price goes, well, we knew it was going to go up, especially as they continue the spend, right? But right now, it is the pace at which it's going up, the acceleration, that is ringing the most alarm bells. The truth is, gold is being snatched up by these central banks, stockpiled in massive quantities, because they know that gold is cheap. See, cheap and expensive are relative terms, right? They only exist if you have something to compare them to. Otherwise, the price just is. So if you looked at gold a year and a half ago at 2000, at that time, it was expensive. Expensive to what? Expensive to its past all-time high, expensive to its past price points. But today, if you look at gold at $3,700 an ounce, right, it looks expensive compared to 2000 and 2000 looks cheap compared to today. That's how expensive and cheap works, which is why I don't even really pay attention to them. I just look at the intrinsic value. And I know, based on history, that gold's value is absolutely there. And therefore, that price is going to go up when valued against something, the dollar, that has no intrinsic value at all, and in fact is declining in its purchasing power at a faster and faster rate. At the end of the day, if you bought gold or you are thinking about buying gold to protect your wealth against this reset, against the devaluation of the dollar, then it is acting exactly as intended, right? And it's going to continue to do so. It is going to be your wealth shield. It is going to be your insurance policy against what comes next. And I know because I talk to people all the time who tell me, well, isn't now the time to sell? Is it at the top? But again, that's just conditioning from other assets that people are used to seeing where it's a market frenzy. That is not what's happening right now. This is not everyday investors who are driving gold's price to new all-time high. These are central banks, institutional investors, those with inside knowledge and those who are positioning for an entirely new monetary system, right? Again, I don't want to repeat myself, but it's this crucial component. Once you understand that, once that clicks, then you understand why now is the time to continue buying gold. If you don't have any, to make sure you have gold at this point, and definitely not the time to sell, right? Because we know what's coming next. And if you know the dollar is going to be worth less, if you know nations are going to continue to ditch the dollar and move into gold, well, then you know where gold's price is going next. So that is my rant on, is it too late to buy gold, or should I be selling my gold? The answer is a resounding no and no. And again, if you don't already have gold, or you want a second opinion, a strategy to prepare for what's coming next, call us at the number below or scan the QR code and set up a time that works best for you. We also have a link in the description below, a Calendly link, where you can speak with one of our expert analysts who have years of experience in helping people just like you prepare for what's coming next so that you too can sleep well at night. And again, don't be the person who's kicking themselves thinking, I should have bought at 2,000, I should have bought 1,000, I should have bought at 700. I should have bought at 3,700, right? The price doesn't matter because it's the value that matters. And if you understand where we're going next, it all becomes very clear. All right. Hopefully I helped clear up two of those big questions that keep coming in. And in the meantime, feel free to share this with anyone. If you or your loved ones, if you know someone who's struggling with these questions as well, it helps us get the word out. And as always, our mission is to help educate everyone and spread the word so we can learn and grow together. And as always, thank you so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.